Hi, Adam. Elbrus with BTS. Quick question. There are a lot of new funds being established in Turkey, a lot of first-time teams. What are your quick advices to them? What they should look for in setting up a new fund, new strategies? Should they just get into the game just to invest in the companies? Should they think long-term? What are your thoughts about this? Thanks.
Yeah, I mean, I think that's a great question. And, I actually worked for a first-time fund for many years and went through ups and downs and, learned a lot about that. And I've also been involved in, a number of sort of business angel type initiatives in the UK. So I would say for first-time funds, well, I think it's a great thing that there are more funds coming into the market, especially if it involves successful entrepreneurs or smart business people that can add value to entrepreneurs. Because a lot of entrepreneurs doing really interesting stuff are pretty young and may not have had some of the experience and exposure that they need to successfully build a business. So the for the benefits of the new capital, but also the expertise that typically come with first-time funds, I think is a great thing. Remember, it's not easy to raise a fund, so anyone who can raise a fund is probably, to some extent, credible. And we're very open to working with those kind of funds. I think there are lots of challenges as well because a lot of the success of a fund is not just about the investments, it's also about how you function and organize yourself and the kind of disciplines you develop about what kind of deals what the profile of the deal should be in the various stages and the exposure and the diversification. So I think the one of the conclusions I drew after working at Excel for 3 months, having previously worked at a first smaller fund many years back, is that the best thing you could do is try to pick the brains of very seasoned fund managers to try and avoid some of the common mistakes that would be made by any kind of new business entrepreneur. And I think the one very common mistake is investing too much money too quickly in a very concentrated time on a very concentrated sector of the economy or of the online space, because if the tide goes out, your whole thing can just blow up overnight. And I saw so many funds blow out in 2000 and 2001, and then again in 2008 for those kind of reasons. And it's also important to remember with funds is that many funds that still exist have actually blown out already because they don't have any capital, have no prospects of raising capital, but they still exist because they have fees. And it's not an easy business to be successful in at all. So I think it's a great thing that it's happening, but proceed with caution, look after the capital well, and make sure to have a very well-paced and thoughtful investment strategy.